This video is all about enterprise value and why I think it's the best metric for fundamental investors to really master and understand. Also, technical traders out there. And I'm going to touch up on why market cap just sucks and why it tricks tons of investors and traders. And I even coded my own enterprise value indicator for people who want to chart this information to understand what a company is actually worth. So yes, if you're a fundamental investor or I think a technical trader, you're going to find something interesting here. Now, first of all, if you're on TradingView and you head up to the indicators tab and click that, you can go ahead and type in Stef's and you'll see all of the indicators that I've coded. This video is specifically about Stef's Enterprise Value Calculator. Now, if I click it, you can see the chart behind me just instantly updates. Now I've got this beautiful looking line here with these different colors. And it is my enterprise value calculator that you're charting with some key details here. Okay, before I go into this and why you need this, let me remind you why enterprise value is better than market cap and why market cap just sucks as an indicator and why it tricks so many people. Okay, I'm looking at the symbol SATS, S-A-T-S. This is EchoStar Corp. EchoStar owns Boost Mobile among other mobile services. The first thing I'm going to show you is their revenue. Okay, we're going to look at total revenue and we're going to look at it trailing 12 months. So let's look at all of their revenue over the last 12 months. Let's add that to the chart. This company does some $24 billion in revenue over the last 12 months. Huge money, 24 billion in a year. Okay, what's its market cap? I'm going to click market cap. Its market cap is only 4 billion. So this company does 24 billion in revenue. 24 billion. You can see that right here. And it's only worth 4 billion. Now, market cap shows you the price per share of a symbol multiplied by all the shares outstanding. Because if you theoretically wanted to buy this company, EchoStar, they own Boost Mobile, right now in cash, you'd have to go buy all of the shares outstanding. So you multiply all of those shares. People all over the world hold some shares of this company, I'm sure, at this point. And you multiply that by the current price per share. That's $17 per share, $17.45. Check my mouse out right here. And that's how you get the market cap, 4.7 billion. Well, doesn't it sound like a great deal to buy a company for 4 billion when it does 24 billion in revenue? I mean, it's practically unheard of. You're paying, a very, you're paying a fraction of total revenues just to get the company. But that's because there's a trick going on here. This market cap number is not correct. Don't get tricked by it. Because watch this. I'm going to go ahead and type in debt. Let's do total debt. Let's do annual. See here, if it's loading. They have $26 billion in debt. So you might buy this company for 4 billion, but as the new owner, you assume this 26 billion. So you aren't just paying 4 billion for this company, you're actually paying the $4 billion market cap plus the $26 billion in debt. You're paying 30 billion to own this company because as the new owner, you assume the debt. So you might have paid 4 billion to buy it, but you are now responsible for paying off this debt of 26 billion. Now, I don't know how a company even gets to 26 billion in debt in the first place. That's for an entirely new video for us to dive into. But now you're seeing where market cap can deceive people. They'll see this 4 billion, they'll think, hey, I got to go buy this. It does 24 billion in revenue, but they're forgetting that there's this much debt. So I've made an indicator called Stef's Enterprise Value Calculator that shows you this key difference. I'm going to walk you through it. This is why you need the indicator. Okay, first of all, you can see here the market cap says 4.7 billion. But look at my enterprise value calculator. It says 27 billion. So just by using my enterprise value calculator, you're going to get a better feel for what a company is actually worth because it's going to add in the debt to the market cap. So then you really know, is this company worth buying relative to its revenue, relative to its income? Because remember, you might look at its market cap and its net income and think, wow, it's got like a 5 PE ratio. But you have to look at its PE ratio relative to its debt as well. This is why this enterprise value calculator, I think, is crucial. Now, my enterprise value calculator is a little different than other enterprise value calculators out there. First of all, I do have a color scheme on the enterprise value calculator to try to help you visualize the trends of this a little bit better. You can see the purple and blues here, which are ebbing and flowing during upward times and downward times. If you zoom out, you can see the green here. The green is specifically coded to show maybe when something's basing or going sideways for some time. Also, this table here is going to show you some very key details because I have yet to say something that's also very, very important about this indicator, and that is the simple fact that my enterprise value indicator also, this is very important, also adds in cash. I mean, all enterprise value indicators do, but mine also does add in cash, and it shows it to you as this table. Okay, so let me explain cash now, why this is important. Recall that I'm adding the debt to the market cap because if I buy the company, I assume the debt, so now I know its true value. Well, what if the company also had 3 billion in cash? Well, you can just take that 3 billion and subtract it from the debt or the market cap, because if you buy a company and it has cash on the balance sheet, you own that cash, so you get to do something with the cash, and you can factor that into your enterprise value. So your enterprise value is market cap plus all the debt minus any cash. Then you get a real feel for what you are buying. Now remember, you subtract the cash because the cash can pay off the debt, or you just pay yourself right back for what you paid to buy the company. It's a subtraction. It's making the company cheaper. So this brings me to an important point, because another key feature of my enterprise value indicator is that you can choose to show cash and equivalents on the chart and total debt. So actually, I double clicked on my indicator. This wonderful menu here opened up. There's a checkbox, show cash equivalents, show total debt. So if I really want to see my enterprise value indicator with these key metrics involved, well, I can add them to the chart. This red line's debt. This green line is cash here, and my colored line up here is still the same. Now, it looks wide because there's so much debt and there's really not that much cash. So if I delete the cash line, let me click and delete the cash line. Oh, delete the whole indicator. Let me add it back. Enterprise value calculator. Let's double click on it here, and let's do just show total debt. So now I can see the debt and the enterprise value. Really gives you a feel for, wow, the debt makes up a big part of this company, and probably why it's not trading all that well anyways. But now let's talk about the aspect of the tables that you get as well. So this table is telling you the highest enterprise value, 27 billion. The lowest enterprise value looks like 889 million. Something happened here, some sort of debt spike. I'm not sure what happened. Probably a merger. I mean, we could probably go look into this and find out it's a merger. That's why the debt spike. You get the average enterprise value. Then you get the market cap minus the enterprise value to see sort of what you're actually paying, if there's a sort of positive sum here. Any time frame 12 months. Now, this table is being calculated because in my indicator, I give you a selected time frame to calculate the table. Now, if we zoom out, we can see something happened here. Could be data error, could be a merger. I'm going to look into it. But if I feel that that data error is messing up the numbers I'm trying to get a feel for here to the right, I want to see an average value, well, I can just double click into the indicator. Now I'm going to change this to 3 months. Click OK. The table updates. So now I get a feel for the average enterprise value, its market cap over 3 months. We can even see time frame 3 months. Now I do want to talk about market cap minus enterprise value, MC minus EV. Market cap tells you the shares, all outstanding, times the price. Enterprise value is your market cap plus debt minus cash. So if this is negative, then you know the company has more debt, because the market cap's 4 billion. You're subtracting the enterprise value. You're net negative 25 billion. That's how much debt you're assuming. But in some cases, a company will have more cash on hand than it does debt. Now, I actually was looking at a 3D printer stock recently. Yep, exactly. Market cap minus EV, 143 million. That means there's $143 million in cash on the balance sheet, more than its debt load. So you really got this very interesting framework going on with these companies. There's this positive event going on. Like this to me strikes me as a true value investment. This is where value investing really starts and begins, in my opinion, all with understanding enterprise value. Because in this example, you are able to get a company that has a net positive score of 143 million. Now, it could be shrinking. Don't get me wrong. This is not an endorsement. All my videos are for educational purposes. But the point is, you can start to see that there actually is little to no debt, or there is debt, but there's just a ton of cash to cover the debt. And there's so much cash, that the company is holding on to, you can actually subtract that from even what the purchase price would be in the first place. So it kind of makes it a little bit more valuable. Now you can even go deeper and you can start to do price to sales ratios with this new number in mind. You can start to do earnings ratios with this new number in mind. Because a company might have a specific earnings ratio based on its market cap. Some people do their calculations differently. But now, if you add in the cash, you're going to bring that number down a little bit because the cash, you shouldn't let that cash number impact your PE ratio, for example. Now, these are all just concepts and theories, but I do believe they are critical, as you probably saw, to avoiding, especially buying companies with a ton of debt, and on the contrary, maybe finding companies with a lot of cash. So you can find my enterprise value calculator on TradingView. You can just type in. Here you can see all of Stef's indicators that I've coded. By the way, if you wish, you can click these brackets here where it says source code. You can look into all of my code. You can see how it was created, what's behind it. You can make adjustments. Just please be sure to credit me and to give me some credit here. And also that, these tools are designed to essentially help people. That's the whole point of these tools at the end of the day, to help people. So I hope you enjoy it. I hope you find something new here. And let me know what you think about in the comments below. And I'm going to be publishing videos about all the indicators I code. You can find them all right here. I'm also adding tutorials on my website as well. They're all free. So reach out to me and let me know what you think. And thanks so much for watching.